Dividend season is right around the corner, which makes now the perfect time to revisit your portfolio and work out which stocks could deliver the best income opportunities for the rest of the year. We've done the heavy lifting and uncovered some very interesting opportunities. A few even offer what we're calling the triple opportunity: strong recent results, attractive dividends, and share prices that still look cheap. Stick around because we'll reveal which stocks tick all three boxes. At Wealth Within, we don't just talk about the market, we've spent decades teaching Australians how to understand it and trade it through our accredited education. I'm Philip Tortevsky, and joining me is Senior Analyst Janine Cox and Pedro Banales. Good evening.
Good evening, how are you?
I'm a bit warmer today. We're normally cold at this point, but...
I know, we're sort of thawing out down here in Melbourne, aren't we?
We are, and we're going to be talking about some hot topics today, which are the dividends. Pedro, welcome aboard.
Good evening, guys. I'm quite the opposite. I'm boiling up here. So, I'll send a little bit of warmth down your way.
Yeah, nice. Thanks for rubbing it in to start us off. But let's dive right in as we enter dividend season and finish off earnings season. Has there been any major takeaways for investors with respect to how they should be looking at picking their stocks for the dividends moving forward into 2027? Because we have had, we have had companies raising yields, not just companies offering attractive yields while the share prices are getting pummeled. What do you make of this reporting season?
Yeah, I think the market is actually really rewarding investors who are upping their dividends. So that's one thing to look out for, and genuine lifts, not just little token gesture.
Yeah.
And we've got BHP as a great example that's reported, and profit up 30%, dividend up around 57%, which the investors are really excited about. So I think BHP is a good story, but not every company will be. And so just because a company ups their dividend doesn't automatically mean that their share price is going to appreciate, and you sort of have to look underneath, or read between the lines and look at what's actually going on and whether the company's healthy and what are the prospects for it, because the market is going to really be harsh on those companies that are downgrading when they're expecting more profit.
Yeah, and I mean, you've got a perfect marker in terms of what we've just seen for our earnings season. But out in the US, we've seen the best reporting season since the second quarter of 2021, where by early August, 86% of S&P 500 companies had beaten earnings estimates. Now, given the US is usually the benchmark for Australia, in terms of where to next, I want to ask Pedro, does this result mean that investors can start to get more risky when it comes to stock selection, especially looking for some of those smaller cap, attractive yield stocks that have been beaten up and that everyone loves to look at? Pedro, is the health of the US reporting telling us something that we should be more upbeat about our market?
Well, yes and no. I mean, our market usually does follow the American market, but it's strange because our market is largely led by the materials and the banks. So we're a completely different market to America, whereas, they're more software and AI related. That's recent boom. But we have seen, it's been the strongest earnings since 2021 over in America reported. And we've actually seen some small caps at record highs over there. So for us, it means that the large end of the market has started to move. And like we've mentioned, the BHP and Rio, we've seen that new all-time highs as well. So now it does give us a bit of room to start looking at those lower end cap stocks, obviously in the resources sectors, and export commodities of the like. So definitely that is looking like a very interesting part of the market and usually pays out pretty nice dividends.
Fantastic. All right, let's not waste any more time, Janine. Stocks.
Yes, let's get into that. And FMG is the first one on our list. This has really been an unloved company over recent times, and this is where sometimes the opportunities can come up. We've seen the share price come back, and I'm just waiting for that next uptick, which could, come pretty soon. So we're seeing this strong support level. I was hoping that FMG wasn't going to come all the way down here to test support, that it would just find support where it is, because there are some important levels around where it's currently trading. If you've studied our courses, then you would know what these levels are to look for, and more importantly, what the upside potential is. And that's the real challenge, I guess, when people are buying stocks in the stock market and they're reading reports around reporting season and hearing about dividends that, well, okay, How do I determine whether that's real or not? And that's the advantage of being able to look at a chart and actually test what's actually being verbalised in the commentary about, that they say there's a consensus estimate that says that FMG's got a target price of whatever it is. Well, why would you want to just believe that? Why wouldn't you want to test that and be able to do that and apply that yourself? So anyway.
Well, I was about to ask that because, to me, there's two parts of this, and I often get asked the question, hey, earnings are coming, should I just buy this stock and get the yield? And it's like, well, hang on a second, do you know that the stock's more than likely or going to fall the day of, ex-dividend day? And is the stock placed in a good location that it makes sense to buy it at that point? Are you buying based on the stock giving you signals on the chart with price that it's going to head up? Or are you just buying for a yield? Because the worst thing you could do, and we see it time and time again, is just buying a stock because the yield's attractive. And that yield is attractive because the stock's trying to keep investors in the market.
Yeah, it's amazing how people get that sort of tunnel vision and they think, oh, this is going to pay a good dividend, I'll pick that up ahead of the dividend going ex-dividend. But it's just, there's a bigger story than that you've got to look for.
Yeah.
Looking at FMG, back on the chart again, you can see there this pullback I was talking about. Now, ideally, I'd like to see it pull back here and start to move up higher and challenge this 22.23. Then we really know that FMG is going to be moving in the right direction. That's what we've got to see first. So this is where reporting season's so critical for stocks like FMG and Dividend as well. But if it comes back and hits this level, then it's still not the end of the world for FMG, but it's really got to show us a nice turnaround and a strong rise out of any low that comes up. The potential is for it to come up and challenge this all-time high. I'd be thinking somewhere around the $26, $28 mark could be realistic once it actually shows that move.
Awesome. All right, that is it for FMG. Now, Pedro, can you take us to the next one, please?
All right, next up on the list is DXS, Dexus. So on the chart, we have seen it get beat up quite dramatically here on the monthly, obviously monthly on the left, weekly on the right. And it really has gone through that whole cycle of, that kind of, that rise that we had since 2009. And now we have, in that kind of bear market, we're kind of in the midst of it at the moment. But eventually, this stock will likely find support. And this level at around that $5 is looking like a likely support level for Dexus. It's already gone through all of this period, sideways action, then that continuation of that move down. So right now, if we look at the weekly chart for a little bit of a shorter term perspective, and this one is paying out good dividends at the moment, it's getting sold off a little bit, but we are basing out. You can see the price action here does look like it's been supported. I'd like to see what happens when it comes back to that $5.40 mark to see if price gets supported. But obviously, if it does break above these highs above here, it'll be a different story. We'd like to obviously see confirmation. Whenever you see a stock fall for so long and for such a percentage, then you want to see that confirmation of the rebound. So for the moment, the dividend story is there. The growth isn't there yet, but could likely be in the future.
All right, one to watch for next time, Janine.
Yeah, another interesting one is you can't go wrong with banks generally when you're looking for dividends.
Yep.
And Bank of Queensland is a bit of an outlier because it's been unloved for some time. This could change, and it's really on the crux of it. I mean, you can just look at the angle of this run all the way down into the low here. It's clear to see that this stock has been really stuck underneath the angle of that. But I don't think that will last. I think that BOQ is going to try to make a comeback. We're going to see it push back up. Just look at the situation in Queensland. The property market's tight in Queensland and people can't get enough supply. So, is that going to change anytime soon? Well, there's a lot more stock coming on the market as well, so that can help it. That could be helping banks like Bank of Queensland, but it's all about the net interest margin and the amount of profit that they're making. So that's really what you've got to watch. But if they continue to pay a good dividend and they move up around above this $7 level, then I'd definitely be interested in what BOQ are doing.
Awesome. All right. Well, stick around because we have more amazing stocks to show you. But now time for our trending topic this week, Janine.
Yes. Now, popular retailer JB Hi-Fi shares slumped this week after announcing a record result. Is this the canary in the coal mine, indicating trouble for the sector? JB announced a record profit for financial year 2026 and total sales up 4.8% to $11.06 billion, which was largely in line with estimates. You'd think the market would be happy with that, especially after JB raised its full-year dividend to 22.5%. Is the market becoming too picky? And are we being measured on US standards? You don't want me to get started on that. Take a look at this. Total quarterly sales growth was 6%, 6.5%, 4% and 0.3% for financial year 26, while comparable sales were 5%, 2.6% and negative 0.8%. These are for the quarters. So you can see the market is concerned about the drop in the last half compared to last year. Historical performance looks quite good, actually, if we compare financial sales growth. The table shows the total sales for each year in dollar terms. So you can see the progression down the column and the record profit this year, as well as the corresponding sales growth for each year. Now, last year's sales growth at 7.5% was particularly high, and this year is reasonable at 4.4%. But last year's spike makes this year's comparable sales appear low. Despite the challenging conditions, JB still produced a good result. But it's the Q4 data and the 0.5% fall in sales growth in July that the market's focused on. The reality is, historically, Q4 is a slower period for JB. Retailers make the most of their money in the first half, and particularly Q2, which covers Black Friday, Cyber Monday and Christmas. Still, commentators are talking JB down based on the decline in comparable sales and a high PE ratio. Coinciding is that US retail stocks are about to report to the market, which adds to the woes of Aussie retailers, particularly as last month US retail sales dropped by 0.6%. Let's take a look at JB in the sector. All right, I've got JB Hi-Fi on the screen there. Now you can see it's been falling anyway prior to this. So if we look at the decline, this is based on the perception of what's going on. And we know that even the CEO mentioned that's a challenge to get the stock, that sales could be down because of stock issues. So if that's the case and things improve in that area, then you would expect to see retailers like JB Hi-Fi improve their bottom line.
Well, you know what's interesting to me? Last year, that run that JB went on was on the back of efficiency, cost cutting through AI. Nick Scali this reporting season, 40 or 60% increase in efficiency in the business.
Right, and they loved it.
Loved it.
Yeah.
And so now JB is in a situation where, you're saying that is not working anymore. So to me, that's the deeper story. It's like, it's all good and well to use AI or whatever you're using to become more efficient, but there are some cracks now that it's not working for everyone. It's becoming a lot more expensive than initially thought, and I think that's the biggest story for these retailers. Some will thrive, but some may have got it wrong.
Yeah, and look, it can also be that they do something in 1 year and they can't repeat it the next year. You're not going to get the same level of growth once you've implemented it the following year. So, last year they had fantastic growth. It was 7.5% comparable growth versus what happened the following year, I think. So, that there's a drop, and but the market's actually really focused on that, plus the fact that July's down. But I still think that JB will surprise later in the year anyway with, Black Friday and Cyber Monday. It always goes nuts at that time.
Yeah, you're right. And I think this world has fallen in love with these results that the AI stocks have been giving. They've been shooting it out.
Straight away you mention that, and all of a sudden that's positive, accreditive to the share price if the company's going down that path, isn't it?
I think we're falling in love with amazing results that we need to settle a little bit. But anyway.
All right, let's have a further look at these beautiful charts here. The first one is obviously JB Hi-Fi itself, and we can see there that stellar rise like Phil was talking about with the AI coming in, and we've seen the pullback as the market sort of readjusts itself. But look, I think that we're going to see a return to trend, and that's what's happening right now. And I don't think there's too much risk to the downside for JB Hi-Fi right now. I think if anything, it's going to be short-lived, and then I would expect it to go back up. This means that, and generally with JB Hi-Fi, it's going to happen quick because because they sell it off and all of a sudden they come back in again. So, we could see it hit that angle a few times and then it might bounce through after that. But you just have to be patient. You've got to make sure you put your analysis on the chart, look for where the best support levels are, working out a confluence of analysis to determine the price, time and pattern all coming together. That's one of the biggest aha moments that I'm getting from people who have come through our, with us when they want to become an advanced trader, and they're being able to put all of that together, and it's amazing what they're discovering.
Before we move on, can I ask you quickly on this stock,
Sure.
Is this one of the ones that falls in that category of okay earnings, not bad, a beat down share price, and
Great dividend.
And a great dividend?
Yeah.
Is this it?
Yeah, I think this is it, and it's just a matter of waiting for the when.
Awesome. Yep. All right. Did you want to look at the discretionary sector as well, or?
Yes, if we've got time, let's do that, because discretionary is actually up overall. So what is that telling?
That's what I was saying. Yeah.
So US has had record earnings overall. The market's scratching and is concerned about what's going to happen in the discretionary space. All we need to see is a little pullback now in this sector and then another further push up, and we know where that's heading. So I'm just waiting for the low to come in, this next move down to come in, and then we'll have a good gauge for where or how high it's likely to go from there.
Yeah. All right, if you want the skills to analyse the stocks just like you've seen us do tonight, visit our website, wealthwithin.com.au. Check out our accredited diploma of share trading and investment. Also, please check out our testimonials. They are up to date. You'll see what is possible and the amazing results our students and clients are having. If you want to take things slower, check this book out, How to Beat the Managed Fund by 20%. It is free. You just have to pay the shipping, by Dale Gillam. The link is in the description in this video. It gives you a nice introduction to all the things we show in terms of portfolio setups. And now's probably never a better time, given what we're walking into in terms of dividend season, to really have a good look at your portfolio, get the book, have a think about how you can use some of those techniques to better your performance. But let's get back into our topic and get into some more stocks. Pedro, what's the next one?
All right, I've got a beauty for you guys next, and that's the Terra Royalties, ticker code DRR now. This one does tick all the boxes. It's got a dividend yield of 5.76 currently, and I'll add in a little bit of an extra metric there. It's got a 13 PE ratio. So that's actually quite good for this type of stock. And it recently reported and came out with a 5% increase in statutory net profit after tax and a 6% rise in revenue from continuing operations. So it's ticking all the boxes in terms of good reporting, a good dividend, and it looks like the share price is rising. You can see from this low in April 2025, the stock has been consistently rising. And what they're involved in is in royalties, as the name insinuates. And it's in the materials sector. So they've got royalties in different mines and things like that. So like I said, from this low in April 2025, you can see that the trend is nice and up. It is getting to this period here, though, this price action that's really between the $5 mark and I would say roughly the $4. So anywhere between $4 and $5 has been a big point of price agreement in the past. You can see that it trades a lot around that price level. So I would just be aware of that $5 level that's coming up, but that range is well intact. But I think that it's got a nice upside still. Like I said, good reporting. When we go to the weekly chart, obviously you want to have rules around this, and this is a stock that you can definitely use rules to trade. You know, when I'm having my intro call with new students, you know, they ask me, well, how can I have that shorter term income? And a lot of them are looking for that kind of, not many come to us for day trading as such. They're a little bit smarter than that, I would say. but they are looking for that income type play. And I would say look for these type of stocks that tend to offer those opportunities. You can usually tell, and once you go through the course and you've had a look at so many charts, you start to get that sense of how a stock moves. And when it moves like this and you've got all these opportunities to buy and sell, really that's what you want to see. And you want to have those setups and be in those setups at the right time. So I think that this one is setting up quite nicely. You can see that the chart is pointing up. This is a weekly chart here. I think that this one is looking quite nice, if I haven't said that enough.
No, it's it definitely shows you're liking that one. But I think you made a very important point. I want to get your thoughts on this, Janine, because Pedro mentioned day trading, and so it is obviously the popular form of trading. But he mentioned that not many people come to us for day trading, which is right. But at the same token, the things you learn in this book, or you learn in our diploma, you can use for any time frame of trading. So if you are someone out there that is thinking short-term trading, that's what you like, just know that knowing to read price action is far more powerful than just locking yourself in one form, because when you have the tool belt, then it's up to you to decide and construct the type of portfolio, the type of strategy, the type of momentum that you're going to trade. And that's the biggest thing for me, from my angle anyway, when it's like one of the biggest questions a trader needs to ask themselves when they start is, especially if you're going to trade, it's different if you want to invest, which you can do too. But if you're going to trade, you need to, the first question I would be asking myself is, okay, what level of volatility do I want to trade? What swing am I trying to capture? Long movements? Am I trying to capture short movements? And you can measure all of this if you know how. And then when you get to that part, then it's about constructing the strategy with the stuff we teach with the rules and that. But most people don't even get to that part, saying, oh, I want to be a short-term trader. But you need to know what level of volatility, what level of time frame, all of this stuff that matches with your goal. Because so many times I've seen, I want to trade short-term, and somebody's looking at, for example, a monthly chart to execute and say, I'm not getting enough trades. What was the reason for that?
Yeah, exactly. And look, I can remember some people that I've spoken to over the years, because I have spoken to a lot of people that thought that they were day traders, but when they realise what you can actually do, and you can only put that to the test because you don't know what you don't know until you give it a go, basically. And so that's what I'd be saying to you, just give it a go, because once you actually learn how to test a stock, as you know, you work out a better way to trade it than what you think. So they think, okay, I'm just going to make $200 or $500 or whatever it is here and there, which really is just sort of, it's not even touching the what's possible for them. They have no idea, because they're so blinkered, and it's just that really short-term fix that they're after, which, it'd be a lot less stress and a lot easier. And I was only speaking to someone just a week ago who was in that same position, but has gone through and learnt how to do it properly. Oh my goodness, I can't believe where I was before and now where I am,
the statistics are there. 99% of day traders don't make it. And there are many studies that show that. And you would be so surprised the percentage of success, how much it increases when you start to do some of the things we're talking about. But if you want to learn more, go and check out the website, go and talk to some of our traders. They'll speak to you on the phone, and they'll talk to you exactly about these things in terms of how you can stack those probabilities in your favour. But let's move on to our next stock, Janine.
Yes, it's AGL. Now, utility stocks actually can be pretty good for dividends and even short or medium-term opportunities at times. Some people try to hold them long-term, but you just have to look at this chart to see that that's probably not always the best idea. And when you look at what happened with AGL, you can see there's a time to be in and a time definitely to be out of these things. But what's really interesting now is what's happening with AGL. So it's trying to find a bottom at the moment. Now, I'd be waiting for some more confirmation. It's not quite there yet. I would want to see it really bounce off this level of potential support that's there before looking for that entry opportunity. But so this comes first. So it's step one is finding that level and seeing what's important. Step two, you've actually got to have an entry that you've tested on a stock like this. Because it does go up for a few months, you can make some really great gains. But then if you don't have the right exit strategy, you're going to give it all back.
Well, that's the key, selling.
And that's important, isn't it? Really important.
Yeah, it is. It is. I mean, we constantly get the comments saying, hey, you said this is going up. it's not moved now. But remember, 1 week changes can change our view on a stock or a market. And the reality is we may be selling, and someone may still be holding, thinking it's a buy. The most important part is to know how to sell. That's when you realize your gains. If you don't know how to do that, then I think you're playing a very dangerous game in the market.
Yeah, it's not a stock tipping thing. It's more about, well, we see an opportunity and then you've got to find your strategy. Well, what knowledge have you got to actually determine that strategy? And I'm working with people that are between 30 and even up to people in their 70s who are doing this. So there's no age barrier. And probably one of the youngest people I've ever worked with was a lady who was teaching her son at 15, through what she had actually learnt herself in the course. So, age is no barrier.
No, and the younger you start, the better. But anyway, let's get to, have we got another stock?
Yep, we have MFG.
All right.
Magellan Financial Group, MFG. Now, we've been talking about this one for a while and it's still holding us in suspense. We can see here this long-term support, and there's also resistance in there as well, but there's some really strong support in there. Now, if Magellan pays a really good dividend and the story turns around, then we could see it break out of the blocks. And this could be a really good indication of where Magellan could go from here. But the setup is what we like. This is the sort of thing that looks fantastic when you see this scenario here that's unfolding on the chart and then just to wait for that entry opportunity. It's looking really nice at the moment, I'd say.
Awesome. All right, Pedro, last one.
All right, lucky last. So now we have GQG Partners, that's ticker code GQG. Now this one has, again, been sold off. So it is relatively cheap compared to where it was before, back in July 2024. But hey, what is cheap? It's not like a banana that you buy at the shops. That's cheap relative to the previous price. You have to realize that stocks are valued and priced relative to their earnings and so on. So, but the beauty about price action and reading a chart is that we can actually see, we can let all the big institutions and all the big analysts do their thing and do all the research, then pile their money into a certain stock. And then we can actually see that happening on the chart and then just ride on the back of that wave, like I always say. So at the moment, I'm not seeing indication of that. I believe that these guys are due to report this Friday. So only in what are we? We're in like 3 days away. So it will be interesting to note and to see what they do with their dividends. Right now, the dividend yield is sitting at around like 10%. P ratio is at 6.5. But obviously, that will change once the new report comes out and those earnings come in. So if they keep their dividends on hold or if they increase their dividends, but also report good earnings, then we could actually see a good growth story come out of GQG. And we also need to see their funds under management because they are an investment firm. So at the moment, we're seeing a little bit of a reversal, and you usually see that happening in anticipation of that report, especially if people and investors are looking for a positive report come out. But I'll just quickly highlight this level here because it's pretty obvious here on the chart where that support is, and it's around that $1.30, roughly to that $1.20 mark. So right now it's at support. Let's see what happens when it breaks that momentum. Let's look out for the report. But all in all, I think that this one could have potential to tick all the boxes quite soon.
Awesome. All right, now shortly we're going to get into our hot stock tip, but first let's answer your questions. John writes, I'm seeking your insights on A2 milk. I entered at $5.86 after it bounced off a recent low and have noticed it's been consolidating for roughly 2 months. There's also a large gap from April that I expect the price may come back to test. Could you please perform some technical analysis and share your perspective on where the stock might be headed next? Janine, A2 milk.
It was John, wasn't it?
John, yes.
Yeah. John, look, I love your stock choice. I think it's a fantastic selection. Well done. In terms of the point where you entered, I suppose you're going to know, you probably, if you watch the show regularly, you'll know what I'm about to say. But I think it was just sort of one of those moments, where you lick your finger and just check to see which direction the wind's blowing, because really the stock was still falling, even though it had started to try to reverse here. I don't know whether you bought on the way down or whether you've bought when it's turned around to go back up. But even so, 1 week up does not mean that it's going to keep rising. And the challenge here now is that it's coming back. It may push back up, but it's really a guessing game now. So, you know, you were probably looking at that and saying, well, I had a nice, you know, profit from my buy price. I've done well, but then all of it's got wiped out pretty much.
Selling again, back to selling.
Yeah. And see, the challenge you've got here is it's you can't avoid looking at the longer term direction. That's always a key thing. It's one of the things that we teach when we're encouraging people in the marketplace is to really understand that picture, because it's like having a view from the top of the mountain or having a view from the bottom. You know, you're going to see a totally different picture. And here, even though we had a reversal there on the monthly chart at the start of what could be the rise, it's just the suckers rally, if you like. So it's just let that suckers rally happen. That's the discipline that you get. And then wait till it unfolds. And I was having a conversation on our traders forum the other night, because it's the senior traders or the more advanced traders. And one of the gentlemen on that forum, he's actually done a testimonial for us, which was so nice of him to do that, but he was so excited to do it because he has totally changed. His whole trading scenario has changed. His outlook has changed. He's gone from, you know, really struggling in the market to making a big sum, which you can see if you listen to or hear about when you listen to his testimonial. But that was talking about, you know. And so it's just made a world of difference to him. So he now knows what's possible, and that's really exciting, I think. But just looking, and that could be you too, John, and just looking at this pullback here, I'm hoping that it's actually going to come back no more than your buy price. That's the ideal scenario. And then it moves back up from there. That would be a great scenario. But stocks don't have to come back anytime soon and fill these gaps. It could take years sometimes for these gaps to get filled. But it's possible that it could. If it starts moving up, and I would say, you know, once it gets back above, probably around the top of that bar there at around 730, if it really goes strongly above 730, then I think, you know, it'll be moving up again. But, you know, it's going to it could even come back here at this point. You just don't know.
Yeah, awesome. All right, John, thank you very much for that email. Now, Henry is next. I've had Meridian Energy on my watch list for a while, and I'm wondering whether the stock is finally starting to show signs of a long-term rebound. With energy prices and demand continuing to change, do you think this could be the catalyst for Meridian to break out of the sideways move and go higher? Is this a stock you would consider for a long-term trade at current levels? All right, Pedro, Meridian, long-term trade for Henry. What are your thoughts?
All right, thanks for your question, Henry. Now, I'd love to understand your level of investment experience and whether what you're looking to gain from this. And I know you mentioned from that long-term perspective. So what type of portfolio you want to put into this, if it's a growth, if it's an income, or if it's a super type of portfolio, because the answer will vary slightly depending on that. But let's have a look on the chart to see what's happening. Now, I understand that this is New Zealand's largest renewable energy play. It's quite it's in the utilities sector, so it's quite a notable company. At the end of the day, you would trade this and you would invest in this as with any other stock. And I know that it's important to understand the story, but at the same time, the answer to your question is actually going to be very simple. Whether this is going to be a good long-term player and when to buy and when to sell. And that's going to be by looking at the chart. The chart will tell you everything. And really, if you stripped away the story of this stock, all the fundamentals and anything like that, and you just had the price action, you could actually trade it the same as you would now. And actually, some of those things sometimes get in the way because fundamentals can sometimes be high, sometimes be low, and then the share price is sometimes going down, sometimes going up. So it can actually contradict itself. So my advice to you would be, firstly, look at price action because it's objective and it doesn't have all these biases. It's either being sold or it's being bought. Right now, I've just put this momentum line here on the chart, and you can see that it is trading below that momentum slightly, and it's pretty tight against those previous troughs there. So right now, I think that it is showing a little bit of weakness. I like it to get above that downward momentum that you see here. Also, the reason why I asked your level of experience is because when you look at the weekly chart here, And automatically, I'm sure our students and our regular viewers would see what I'm seeing here on the chart, and that is a stock that doesn't look the most liquid. When you look at that $4.63, and just the biggest volume here was 103,000. You times that by 4.63, how much dollar value was traded on this stock on Friday, August 14th. I mean, it's basically 100,000 times 4.5, just say $5 to round it off. So $500,000 worth was traded on that day. Now, I would urge you to go have a look at a stock like ANZ or some of the banks, some of the big stocks, and do that comparison. See how much volume was traded on a particular day compared to the share price, and you will see what I mean by that. There's not much liquidity in this, and I mean that was a mathematical calculation, but you can actually visually see that on the chart, especially as your eyes get adjusted to it. And I'm also seeing type of patterns here that doesn't look quite bullish. So all in all, I know I've gone on for a little bit. Long term, no, it's more of a trading stock. Watch for price to get above this momentum if you are looking for an entry.
Awesome. All right, we have Luca next, and he writes, I would love to know your thoughts on the recent Cochlear movements. I'm a medium to long-term trader and have loved the idea of picking up Cochlear in my portfolio ever since it dropped. Wondering if this looks interesting to you all. Now, we're going to cover off, well, I shouldn't give it away, but we're covering off another stock which is very similar in that space next.
Yes.
Cochlear.
Yeah, Cochlear is a good one. Really interesting that you picked this one. It's already risen about 50% off this low. So, there's the challenge. And I know being a medium, if you're more medium to long term, that's, great that you're thinking over the broader view. Upside potential, I see potentially around 180 is where it could end up. However, it could also come back and test this bottom, which would bring it back to maybe 110, 120 as part of this run up. So that's the real risk with it at the moment. So when these stocks come off lows, it's probably the riskier time to be picking it. So, if it comes back 10 or 11%, that's probably reasonable, 12% even. If we look at the last run, and I'll just expand that up, that little one there, it came back about 15%. So, if it comes back 15%, that's probably normal. If it comes back any more than that, I would say that there's a cause for concern. So that would be around 115. There's a possibility for it to come back to that level, because then the trend's still nicely intact moving up, and that would really bode well for the share to further move up. If it keeps moving up from here, then, it could eventually make its way. But we're going to see, I think we're going to see, it's going to rise in stairs, and we're going to see the elevator drop at some point. It's not going to be necessarily smooth sailing given where it's come from.
Well, unless it's really been beaten up that much unfairly, that we see mineral resources that really sharp. But what's interesting to me is when you look at the situation it's in, because right now the big question that I would assume, because we've had a lot of questions about Cochlear and CSL, is what's really being asked under the hood is, or between the lines, is this the major low? That's really what's being asked.
Yeah.
And when you talk about a stock of this caliber, I understand why that question's being asked, because if you were to pick this up around these levels, or $100, which someone went out, and called that on media again, but no, I'm not going to.
Yeah, I know, and you did call it out, and you also had some of your mentorees who you're working with come up with strategies to trade this one.
Yeah.
And so that's great. But I just think looking at this stock, it was a short-term opportunity that happened already. For medium to long term, I don't even think the setup's happened for that yet.
Okay, yep, so there's still time for someone like Luca who's thinking more long term.
Well, yeah, didn't he say he's already got it? I mean, that was the point.
Oh, no, he was looking and he's seen it go up and he's thinking.
Oh, okay.
Yeah.
Yeah, well, see, it's all about risk and reward. You've got to know how to set a stop loss for this, regardless of whether you think you're medium to long term. Because a stock like Cochlear, even though you think it's an amazing stock, these stocks can always go lower. And that's one of the things that I realised when, having lived through the GFC and seeing really good quality stocks that you thought weren't going to go lower. Rio went to 90%, fell 90%. Who'd have thought? So
That's such a good point.
Another good example of that. Nobody thought Cochlear was going to fall this far.
Yeah, and it's so true. I mean, at the end of the day, that is one of the biggest things that is forgotten. It's like you fall in love with the story and then you forget, hang on a second, there's this thing called market movement and volatility that could forget about how well you think about the story and destroy you.
Well, it's always got to go up, right?
Well, yeah, that's what they say, right? Anyway, now time for our hot stock tip this week. Pedro, what have you got?
All right, our hot stock tip for today is CSL, basically CSL Limited ticker code. You guessed it, CSL. Now, CSL reported today a FY26 statutory net loss of $1.6 billion driven by asset impairments. But they announced a $1.1 billion share buyback and strong underlying profit. So it's basically a company that's going through a restructure. And I think that they've actually gone through the worst. And, 2027 is going to be a good financial year for them. And what's promising as well is that they actually kept their dividend as it is. So they maintained it at $1.62 US per share, 100% fully franked. So it fits with the theme of today as well. Now that the share price is up around 16% today on that news. So it looks like the investors took well to that. So let's go onto the chart and let's see if there's still some opportunities or if you've missed out. Now, I would say that the first move is done, right? So you haven't necessarily missed out because there's a long way that CSL can still go. But there was a nice setup here that if you picked it up, you would have actually been in a nice little profit here. And sometimes you can pick these up at the lows when it makes these type of moves. And volume was indicating as well that it was getting picked up. I mean, you can go back to this bar here in June 2026. Have a look at the volume on that one. And this goes back to what I was saying about that other stock earlier, 15 million, almost 16 million. And the share price was at around $116. So, do that math and you can see how much of CSL was traded on that day, on that week, actually. So right now, from that low, we are around, I think, 60-70%. Yeah, around that 76 to 80% from the low. But when you think about it, we're also from the all-time high, we are still, we were down 75% and we're still down around that 50%. And, our traders would know what that means. And it's a very important dynamic that's happening here with the share price, the fact that it is down that much. And now it's trading around that level, 160. So I would suspect that there's a little bit of short-term resistance at around 160. But all in all, good news for the long term. And we do have a new kind of medium to longer term trend established. We might see price come back slightly to that angle of the rise. But I think that this is great news for CSL. They've got that out of the way. They've got those losses out of the way. They can move on. And a lot of people have been really, we've been getting asked about CSL for a long time now. They've been aching to get back into it. So I think that this is all that pent up, need and want to get back into CSL. So one final thing, I'll just note that we have broken above that momentum there that we established from the high of July 2025. So we've poked our head around. For now, just watch for the retracement, watch for what happens around that $160. But I think we're good to go for CSL.
All right, if you want more from us, check out this video.